Okay, let's look past the daily price charts, forget the crazy headlines for a minute, and ask a much bigger question. What does the next chapter for crypto actually look like? Based on where things are heading, we're going to peek into the not-so-distant future, around 2026, and see how this whole space is really set to grow up.
So right off the bat, this is the big question we've got to tackle. For years, crypto has felt like this chaotic, unregulated digital Wild West. I mean, that's its reputation, right? But it seems like all the signs are pointing to a major shift on the horizon. That era of just pure wild speculation, it might be giving way to something totally new.
And that is the key idea right there. The future probably isn't about crypto replacing the old financial system, but becoming deeply woven into it. We're talking about a huge transition from being this niche, speculative thing on the side to becoming a foundational piece of the global economy. Understanding that shift from chaos to integration is everything. So before we can really look forward, we have to understand the era that's kind of coming to a close. This first section is all about getting a handle on that first, chaotic, incredible chapter of crypto's story.
This slide pretty much sums it all up, doesn't it? The crypto we've all known has been defined by these insane price swings, a constant will they or won't they game with regulators, a user experience that, let's be honest, basically required a computer science degree, and a market driven almost entirely by the hope of striking it rich. So this is our starting point.
So what's the first big domino to fall? What's the catalyst for all this change? Well, it's the massive collision of crypto and Wall Street, or TradFi, as everyone in the space calls it. This is where the big, serious money starts to flow in, and where the big changes really begin. And you know, this integration doesn't happen overnight. It's a step-by-step process. It starts with things like spot ETFs, which are basically just investment funds that let anyone buy Bitcoin or Ethereum as easily as buying a stock. That then opens the floodgates for money from retirement and pension funds to pour in. And the end result? Crypto starts acting less like some weird fringe asset and a lot more like a big tech stock, reacting to the same global economic news.
This brings us to what a ton of analysts think will be the single biggest story of the next few years: real-world assets, or RWAs. The idea is actually pretty simple, but it's totally revolutionary. You take a real, tangible asset, like a building or a government bond, and you create a digital token on a blockchain that represents ownership of it. And this is not just some sci-fi concept. We're talking about tokenizing real, valuable stuff. Just imagine owning a tiny fraction of a skyscraper in Tokyo, or a little piece of a portfolio of US Treasury bonds, all held as tokens right in your digital wallet. This could unlock a tremendous amount of value and make things that were previously inaccessible available to pretty much anyone. And just to give you a sense of the scale we're talking about here, look at this number. Projections from huge institutions like the Boston Consulting Group, they're estimating the market for these tokenized assets could hit $16 trillion by 2030. That is not a typo. 16 trillion. This isn't some niche market. This is the kind of institutional level value that could fundamentally change how global finance works. But look, integration with Wall Street is only half the story. The other, maybe even more exciting half, is all the innovation that's happening inside the crypto ecosystem itself. This is where we look at the next generation of the purely digital economy. This slide just illustrates the journey of decentralized finance, DeFi, perfectly. The first version was powerful for sure, but it was clunky, it was risky, and it was really only built for insiders and coders. The next evolution, what we're calling DeFi 2.0, is all about the user experience. The goal is to get to a world where using these incredibly powerful tools feels as simple and safe as your banking app, and where your assets can move between different blockchains, like Ethereum and Solana, totally seamlessly. So why does this matter to you? I mean, what's the big deal? It means the incredible potential of DeFi, things like earning interest or taking out loans without a bank in the middle, could soon be in the hands of everyone, not just the crypto experts. It's about hiding all the complexity so we can finally unlock the utility. And it gets even more futuristic when you start looking at how AI and crypto are coming together. We're seeing ideas for blockchains built specifically to power AI, crypto networks that let people pool their computing power for AI models. That's a sector called DePIN. And then there's this really fascinating concept of AI agents that can actually manage your digital assets for you. I mean, just stop and think about that for a second. An AI that you own, acting like your own personal fund manager in the digital world, running complex strategies and interacting with protocols for you 24/7 to optimize your portfolio. This isn't science fiction anymore. This is what the leading minds in this space are actively building right now. Okay, so we've got Wall Street coming in, and we've got all this native crypto innovation. But there is a third massive player entering the arena: governments themselves. And this brings us to central bank digital currencies, or CBDCs.
Now, it is absolutely crucial to understand the difference here. As you can see, a CBDC is centralized. The government issues it, they control the supply. Cryptocurrencies like Bitcoin are decentralized networks. A CBDC is basically just a smarter, programmable version of the dollar, while Bitcoin is more like a digital commodity, a digital asset. They are built for fundamentally different things.
And here's the surprising twist. The thinking goes that instead of competing with crypto, CBDCs could actually speed up its adoption. Think about it. By getting hundreds of millions of people comfortable with the idea of a digital wallet from their government, they create this huge built-in user base that can then more easily plug into the wider crypto world. It's a massive on-ramp. So we have this picture of a maturing market, right? It's being driven by big money, incredible innovation, and even government digital currencies. But let's be real. The road to 2026 is not going to be perfectly smooth. There are still risks.
Yeah, we have to be realistic about the challenges. Overly harsh regulation could absolutely crush all the innovation we've been talking about. A huge wave of new users could clog up the networks, leading to crazy high fees and slow speeds. And of course, as the amount of money in these systems grows, so does the motivation for sophisticated hackers. These are the big hurdles we still need to clear. But if you just zoom out for a second, the overall trend is crystal clear. This slide really gets to the heart of the whole transformation. The crypto industry is making a fundamental shift in focus, away from just betting on prices and toward building things with real, tangible use cases that solve actual problems.
And let's end with this powerful idea. It's such a great reminder that while we can see all these trends coming, tokenization, AI, user-friendly DeFi, the most impactful breakthrough of this next chapter might be something nobody has even thought of yet. That's just the nature of this kind of game-changing technology.
So the last question is really for all of us. Once all the financial plumbing is in place, once crypto is deeply integrated into our world, well, that's when the real work begins. It stops being about what crypto is, and it starts being about what we, as a global community, decide to build with it. And that is a future that's absolutely worth watching.
Please like and subscribe for more trading content, and then subscribe for more daily, weekly trading insights.